We've just released the third volume of the Yahoo Finance chart book. We've compiled more than 30 charts from economists and strategists across Wall Street for insight into trends for both the economy and the markets. Josh Schaefer, one of the people helming this big effort, and he's here to dive into one of those charts. What do you got for us, Josh?
Yeah, Julie, so one of the prevailing takeaways from this edition of the chart book was the case for the Federal Reserve to cut interest rates and cut interest rates soon, most likely in September, is what a lot of economists argued that responded to us. And what I have with us today is a key reason why. So it's not just that inflation has been cooling and inflation is coming down closer to the Fed's 2% target, but what we're looking at here is a chart from Brett Ryan and the economics team at Deutsche Bank highlighting specifically rental inflation. So this is measured in the consumer price index, and you can see here in light blue and red coming down here, you have inflation, rental inflation that just came down rather significantly in the most recent release. That's owner's equivalent rent and rent of primary residence. This has sort of been chasing what's in pink here, the Zillow rent. And really, this sort of was described by Deutsche Bank as a, quote, game changer as far as how they were viewing Federal Reserve policy. They initially had a call for a December rate cut. This CPI print comes out, you see rent coming down, and they say this sort of changes the game for the Fed, largely because rent is considered a sticky part of inflation. When rent is continuing to pick up, it can sort of follow that trend. Similarly, they feel like that is going to be what happens with what we're looking at right here in 2024. And they think as rent continues to come down, it will come down rather significantly and in consecutive order. So basically saying that once rent starts to fall, it's likely to keep falling. And if rent was a key concern in some of these inflation readings, this is a very good sign for the Fed and a sign that we're headed back to that 2% goal, which when you combine with some trends we're seeing in the labor market, that likely adds up to the Fed cutting relatively soon.